4,981 option contracts at the 180 strike calls expiring tomorrow. Apple is at 165. Will report earnings in less than 1 hour. It is May 4, 3:06 p.m. Does this mean this is a very bullish call on Apple? In this video, we are going to go over our options analysis on these unusual options and determine where Apple will go after earnings and go over our trade for Apple earnings. So let's get right to it. Now, these 180 strike calls done at 1:22:52 second mark here, you'll notice that it is actually a spread. And so there was another option that was connected to this. And interestingly, well, unusually, you cannot find that option anymore on this options tape at this time. There was also another 4,981 call spread or call being done that connected this to create a call spread. And what was that? We were monitoring it and we saw it. We detected this, and it was the 175 strike calls over here. This was done. This was sold. You'll see this volume much greater than the open interest. They were selling these at the same time as buying these 180 strike calls. So it is not bullish. It is a call spread, selling the call spread. And when they did that, they were collecting, actually getting a better price than currently, because at that time Apple was higher. When they did that, this was the spread here. The 175, 180 strikes expiring tomorrow. They collected $50 in credit for this trade. And they did this 4,981 of them. And so when we saw that at 122, we also got into that position as well and collected that $50 credit. And so what that allows us is we get a negative vega on this trade now to take advantage of the volatility crush after earnings. You see this negative vega, which is good for earnings trades. And then in combination, we also have our January 2024 bear put spreads. We did this, we went over this on a video 4 days ago on April 30. We'll put that link at the top here. If you haven't watched that video on why we did that, make sure to watch that if you have info card turned on or at the end of this video. So this is our position. It is bearish. However, it can also rally. Apple can rally all the way to 175 right here. Our break even, you'll see, expiring tomorrow is all the way up here. You see this 175. So even though we're bearish, we have a very good probability of not losing on this trade. So this is the type of position we like for earnings. You'll see here it's a negative 12 delta. So it is bearish, but keep in mind that even if it goes to 173, you'll see here at expiration, we will still be profitable because we took advantage of selling this call spread when the price was higher earlier today. And so you'll see here, Apple has been on an uptrend, and you'll see even, since March it's been on an uptrend. There's even a sort of this trend line here. You'll see here that it has been bouncing off this trend line. And so could it bounce off of that trend line again after earnings? Well, possibly it could. And will it bounce past 75 though? that's less likely, but it's still possible. But it's the probability is less, and that's why we like this trade, because 175 is closer to the high it had made all the way back in August of last year. You'll see close to 175 ranges around that time. And so we are in this trade, as you can see, with our call spread here, and also our bearish position that expires. Actually, it's for January 2024. It is these 110 strike puts and these 90 strike puts that we sold. And so make sure to watch that video at the end of the video to understand why we put this trade on 4 days ago. And so you'll also see that this trade, this 5,000 contract trade here, this was done at 2:19 p.m. What is this? Well, even though it is red colored, that doesn't mean they sold it. What we think it means is that they had sold the 143 strike puts and bought the 140 strike puts. And what is that? Well, that is a 143 is over here. You'll see this over here. You'll see that the volume is greater than the open interest, and the 140 is also greater than the open interest here. So these are opening orders. We think they sold that, and then they bought this. And what that does is a bullish trade. You'll see here. This is bullish. This is just collecting volatility, taking advantage of the volatility, because the likelihood of Apple dropping below 143 is very low. And so they're taking advantage of this because they are because of the earnings. And since it's a negative vega, this is a trade that is high probability. The profit is very minimal. And so that's this trade, this 5,000 contract trade. It's not really showing us a strong bias in a direction. It tells us that there is a possibility that Apple has a lot of room to drop, and that the large institution that put this trade on is not so confident that Apple will not drop. And that's why they gave it such a large room to drop and still be profitable. So that's what you can assess from this kind of a trade. And that's why we like this trade, where if it goes down, we'll be more profitable. And if it rallies, we will also be profitable up till the 175 mark, which is our break even at expiration. When it expires, this is our break even. It will be above that zero profit line here on the y-axis. And so that is our trade. Keep in mind our trade, because we're selling a call spread, it requires $500 of buying power to sell this call spread. You can always adjust this amount with the strikes to reduce that buying power, because it's 5-point wide, it's $500. And so that is what we think about Apple's earnings, and we'll find that out in about 45 minutes when market closes. So please smash that like button and subscribe if you haven't, and hit the bell icon, and you will be notified whenever we see unusual option activity. Thank you, and take care on Apple's last hour to trade earnings.